Well, it just seems that the deals are being made on the forex, the big currency markets, Russia, Brazil, China. They're really just sidestepping completely this whole U.S. dollar reserve complex that's been in place since World War II. And I think that's going to be continue to be reflected in the downtrend in the U.S. dollar because the reserve status, global reserve status, has given it tremendous strength over the years, and as these major countries are now doing bilateral deals, and they're not having to float the dollar as they have been, this takes a lot of support away from the dollar. Now, I just can't, the U.S. economy. There's so much debt there, and the dollar is collapsing, and they're talking about downgrading the debt down from the AAA status to downgrade the debt. The only way to pay off the debt is to just slash and burn. What's in that economy? I mean, this is
well, they could devalue, honey. They could devalue the dollar. I used to have to do a lot of deals with Italy, which were famous for devaluing their currency, and God, they did it all the time. So you would do a deal with them, and a year later, their currency was worth like 40% less.
Right. So you have this devaluation coming along. And, we were talking to Dr. Marc Faber on this week's episode of On the Edge with Max Kaiser. And we were talking about gold, and he's been saying that gold bullion, he's a big believer that there will be confiscation of gold bullion. So if there's a devaluation, the way they do this, they revise the price of gold upwards by 30 or 40 or 50%. Yeah. Having the effect, therefore, of devaluing the paper currency. And when this was done in the 30s, they also confiscated the gold first before they did this. Now, he believes that there will be gold confiscation. Again, he's a pretty strong believer of this. There also is talk about how the exchange-traded funds, the GLD, for example, and the SLV on the New York Stock Exchange, are easy vehicles for the government to confiscate gold. There's over 1,000 tons in GLD, so it's one of the biggest reservoirs of gold anywhere in the world. So the government conceivably could say, well, we now own GLD. There's plenty of gold there. The question is not whether or not there is gold there. I think the bigger issue could be that the government seizes control of GLD and pays everyone out in devalued dollars. And the same thing with the other ETFs out there. That's a scenario that's being talked about. That's why people who are proponents of owning gold say that the best thing to do, of course, is to own the physical bullion itself. Then the gold mining stocks offer some interesting way to participate. And the exchange-traded funds are trading vehicles, but, they do have some properties that might not make them such great vehicles once you have this, as you're saying, and as others are talking about, a devaluation in the U.S. dollar. But how can they avoid a devaluation? It seems like it's just going to be, it seems an unavoidable.
Well, they'll do it when it gets too close to them being downgraded. They're just going to quickly devalue and just wipe away all their debts before the world abandons the U.S. dollar as reserve currency. Then they'll do it. It's like a person whose house is being foreclosed on in the U.S. There's a big trend of trashing the house.
Yeah.
So they'll just trash their currency before the world decides to foreclose on them.
Well, it's so many people are recommending to try to prepare oneself for this thing.